in the case of the Jones family, again, multi-generational family office, single family, investments concentrated in private equity. And in this case, the senior family member also acting as the chief investment officer. As in the Smith case, the chief investment officer, senior family member, did not solicit input from the rest of the family regarding investments that were made. And actually, a step further, when the family would convene and financial reports were shared, different valuation methods were used such that the reports would contain some assets that were reported on a cost basis, some assets that were reported on a fair value basis using public indices or other benchmark information, and then some assets that were reported using hybrid valuation methods that were not standard accepted valuation methods. So it would be very difficult, even if you were an astute, sophisticated investor, to really understand a common valuation mechanism. Because of that, investment performance was also skewed. It was difficult for the family members to really understand how the investments in the aggregate were performing. So now let's look at that dynamic and again go through and start with Vic. Vic, to start, in the context of the investment reports and the financial reporting, the chief investment officer was concerned about segregation of duties. This family was investing all over the world. There were some of the employees had the ability, with the push of a button, to transfer millions of dollars and also record disbursements and expenditures or outlay investments. What were your observations when looking at the segregation of duties?
Yeah, and segregation is always the first thing that we look at, Tim. It's the underpinnings of any solid internal control foundation. Make it more difficult for any one person or persons to conceal some bad behavior, quite frankly. In this particular office, the principles of effective segregation were basically ignored. So we had a situation, for example, where one person who was preparing the financial statements, the investment reports, was also writing the checks and doing the bank and broker statement reconciliations, putting him in a very enviable or a very bad position, depending on what your viewpoint is, and really weakening control across the board. One of the difficulties or the challenges in a family office is that there often aren't enough people to go around and spread the wealth, per se, or split out those responsibilities, because family offices, for the most part, are fairly lean. The people with hard accounting skills generally are few and far between, which makes it all the more important to institutionalize, if you will, Tim, a corporate governance or an oversight, whether it be by a family member, a director, an external auditor, what have you, even if done on a sampling basis, to perform that particular function.
All right. So you're actually introducing another observation, which is, again, what we're speaking about, but put a different way. We've been speaking about governance so far in this discussion. We've been speaking about financial reporting transparency. We've been speaking about controls, all in the context of preserving wealth for a family. But if I were now to turn to Art and now to talk about how that gets reported out to, say, in this case, the family members, Art, what are your observations about the fact that there's multiple, a financial report using multiple valuation cost methods of performance and statement?
Bad.
Yeah.
Look, the basis here is very similar to if you had a regular financial statement. You should have a consistent method of reporting. There should be transparency and a consistent method of valuation. So in this case, because you didn't quite understand what they were reporting, the balance sheet was off, the income statement was off, the cash flows were potentially off, and the future forecasting was off. So how do you correct that? You set up consistent policies, which, according to accountants, would be market value first, and the best published method would be the newspaper if you had for stocks. Then you go down the pecking order to valuations. The key with the valuations, though, is that they're consistently done, the assumptions are put out, and the reader knows what they are. And that should be within the report. So anyone that's reading it can at least look at it, and if they have to question what the valuation methods are, they'll see the assumptions and possibly get back to the provider of the financial to be able to adjust accordingly.
Thank you, Art. John, now beyond manual record keeping, using technology, clearly a direction that many family offices, certainly Commerce generally, is headed. In this case of this family, they were transmitting data electronically, rather common. What are some of your observations when you reviewed the safeguard of data, the protection of the data, making sure that it was sensitive and maintained properly? What were some of your observations regarding that environment?
Tim, I think you can pick up any newspaper, and there's so much written about privacy and data protection, and there should be. From people working in different locations, working from home and working from the office, there are critical points of how data gets stored, retained, and much of that information is, private information and confidential information. So it is very critical how the policy and procedures of a company over that type of is really critical. So some of the issues that we've come up with when we do a risk assessment and value certain areas is that we find out that they don't have all the correct protocols in place. One example is went to one of the companies approximately about 6 months ago, and we were going to give a presentation. I met up with the CFO. I had an IT director with me, and when we got there, they said, could you print out a couple of presentations? It was my first time at the office. We opened up the computer and printed out a presentation on the network from the client without any passwords, without any protections, without any firewalls. So you really need to take a look, because on that same floor where my client was, there was other companies sharing that floor, and they could access that information also. So it is very critical to protect yourself with different protocols.
Right. This is a question for the panel, for John, Vic, and Joel. When advising families about reliance on traditional paper check writing, deposit disbursements, or using electronic transfer technology environments, what's your view on what could be superior or not to weigh toward more technology or more toward traditional record maintenance and information flow?
Although using the computer systems, which helps better control things and gives you more ways to see the data, it does not alleviate the fact of all the other segregation of duties that Vic has spoken about, as well as periodic review procedures for all of the accounts and records. The system could be very good, it could be working properly, but you want to make sure you're reviewing and overseeing the system regardless of whether or not you're using the computer system compared to manual.
Very good. John or Vic, any?
Yeah, Tim, I don't think there's any clear-cut better way. Obviously, a good automated system is going to be far more efficient, but the controls that are embedded in those processes are different than what you might see in a manual check flow.
Just to weigh in, I think that I agree with both of the other panelists. But the focus that I look at is things are changing constantly. Everything's being automated, technology. So you really need to take a look at how the information is flowing. There's a lot of encryption devices for any type of files that you're going to send out, password protection over a limited amount of time, and how they're alphanumeric and different types. So these are certain protocols out there that can help you. But I would definitely look at what works best for the company and make sure that you have the proper controls around it.
Right. And I guess to conclude, some of the other areas, employees, independent contractor versus employee definitions, financial reporting. A lot of us have now been through these foreign bank account reportings. So typically, you gentlemen, you're looking at that as well when you're conducting a review. You're trying to also make sure that all the proper reportings, whether they be financial statement or tax reportings, are also effective.
Mm-hmm.